Ladies and gentlemen, welcome back to the channel. Boy, do we have an exciting video for you today, and I really can't overemphasize this one. We're talking about POET in today's video. Hello, down 8.5% today. But did you know the company just raised capital at $10 a share? Over $10 a share. Okay? We gotta get into this information, okay? I don't think there's or could be a more bullish sign for the company's future prospects than this. Doesn't get better than this, okay? This is what I view as an opportunity. We're gonna look at the news today. We're gonna look at my position, okay? I actually did some buying today because when news like this comes out, it's one of those, like, somebody knows something kind of things, okay? So I did do some buying. I'll share my position. And all of the news today, we'll look at the option activity from hedge funds and institutions, all of that as well. Do me a quick favor. Hit the like button. Subscribe to the channel. Check out the link down below in the description of today's episode if you want to come join the trading community, where we are going out, identifying, tracking, investing in these under-the-radar opportunities such as POET. Now, again, on a day like today, it doesn't look like POET is doing much of anything. It looks like POET is, just down 8.5%. Not a great day. But, in fact, the company raised about $150 million, okay? You might say, why is the company raising money? They're debt-free, and they have $150 million before this in cash. They're ready to go. Well, it suggests to me that production is, they're getting ready to really produce in some numbers, okay? Now, before we get any further, we got to look at these numbers, okay? It says POET Technologies raises $150 million in oversubscribed registered direct offering. POET Technologies, the Canadian innovator that fuses optics and electronics on a single chip, has just completed a highly oversubscribed registered direct offering of common shares, raising $150 million in fresh capital. The move comes at a critical juncture for the company, whose market cap hovers around $747 million and whose stock has struggled to retain traction, trading at $8.23 on October 23rd, 2025. That's important. Keep that in mind. $8.23. Okay, keep that in your brain. Well below the 52-week low well below the 52-week low. Okay, that doesn't make sense. But the 52-week low was $3.09. Okay. The offering, numbers that matter. I about like, punch my computer when I see these numbers. Okay, price per share. They set the offering at $10.25. What? 20% higher than the stock was trading at. Okay? That really doesn't happen in private placements. Why would it? If these firms can just, people that took this private placement can just go out on the markets and buy the stock for 20% cheaper. It is a very good sign of something good coming. Even then, consider, everyone knows when Wall Street figures out there's been dilution, when that news comes out, the stock's going to fall even more. So really, you're paying like a 30% premium minimum to participate in this private placement. Likely they did so to, have a little bit of insight, insight into the company. You'd imagine, right? At that stage, you're talking to executives. You probably know what the news is going to look like over the next month or two. You probably have a pretty good idea of what earnings are going to look like in the next 2 weeks or so. There's probably a reason you're willing to pay 20-30% over market price for your shares, okay? So, again, the price on October 23rd was $8.23. The price for this offering was $10.25. The offering price reflects a modest premium over the closing price on October 23rd, again, about 20% higher. The company issued 14,634,146 shares that were sold, diluting existing shareholders but bolstering the balance sheet. Look at this. Subscription rate. The offering was oversubscribed by approximately 250%. So basically, just rough numbers here. If the company was trying to raise $150 million, these firms were like, hey, we have $400 million for you. $500 million for you. Okay? I'm throwing out rough numbers here. These are not exact figures. But basically, there was a lot of money that wanted to participate in this. Okay? Now, this offering was to 2 fund managers. Okay? It says and participants include 2 new fundamental investment managers. The company said its pro forma cash position is expected to be in excess of $300 million following closing. Net proceeds are intended for targeted acquisitions, scaling R&D, accelerating the light source business, expanding operations, and general working capital. Okay? So let's look at this even more simplistically, okay? The company, after today's selling, has a market cap of roughly $650 million. They have $300 million in cash on their balance sheet. So the company has 45% of their total company value in cash right now. Okay, now unprofitable companies like a Poet that have small orders coming in, it was reported last week they had a $5 million order that came in. They don't really trade based on the amount of cash they have on their balance sheet, right? But it might put it into a little perspective just how potentially undervalued this company is. Now, here's the deal with Poet. They are essentially pre-revenue. They are starting to get some orders, as I said. The estimates are all over the place. This company could do north of $500 million in revenue next year, and it could be dirt cheap. Or they could do $10 million in revenue next year, and it's aggressively expensive. Okay? That's where a bit of the opportunity comes in, because you just don't know. Now, these offerings, again, selling stock 20% higher than what they could buy it for on the open market likely suggest that there is, some really good news coming soon. Okay? At least that's what one would imagine. Now, again, the company raised capital to be able to accelerate their production of their products, which is also a good sign that they're expecting to have more demand and or more partnerships. As I've said before on Poet, this company is really just one partnership away with a hyperscaler from going absolutely parabolic. Okay? This could be a $40, $50 stock if they get a partnership with a hyperscaler. Okay? Like $1 billion, $3 billion multi-year deal, something like that. The stock's going to go absolutely crazy. Again, it's a $650 million market cap company because it's pre-revenue, because there's a lot of unknowns about what the company, is going to do as far as sales next year. That's where the opportunity comes in. Sometimes with smaller companies like this, you have to read the tea leaves, okay? And again, for institutions to just give the company this much money, 20% higher than market asking price, when they know damn well the stock's going to sell off when the news comes out, so it's really like a 30% premium minimum. They don't do that for no reason, okay? That's what I mean, read the tea leaves. They don't do that for no reason. Okay, now there is some good signs, though, despite the stock being down 9% today, okay? The 20-day moving average is at $7.49. At the time of recording this video, the stock is at $7.49, okay? For most of the day, it's been above this, and it's really found support at this 20-day moving average 1, 2, 3, 4, 5, 6, 7 days in a row. Now, with this kind of news, I'm not going to be the only one that's catching on to this, okay? The stock is selling off today purely based on algorithms, okay? As people start to understand this news, or maybe there's better news coming, which would not surprise me, earnings are scheduled for around November 13th, I would expect the stock is going to go up significantly. Okay. But it is a good sign. Again, you're finding support at the 20-day moving average. That's looks like a bit of a demand zone. People are coming in, stepping in, and buying positions at this level. So overall, this looks like a big win to me if you are a POET shareholder. But keep in mind, again, POET is speculative, right? I mean, if you're looking at something like Apple, that's not very speculative, right? If you're looking at a biopharma, that's speculative. POET is like a biopharma in AI world, okay? You just don't know what kind of business the company is going to be doing. Now, that $5 million order from last week looks really good, and that's validation of the technology. And with this kind of news that we're reporting in today's video, there's probably going to be even bigger partnerships. There's probably going to be some really good news announced, but that's not a guarantee. Maybe there's a shady deal happening here, you know? Maybe there's some shit that you know, is not good. You never know, okay? So you do want to be careful with stocks like this. I'm not a financial advisor. I'm not a financial planner, okay? I can read the tea leaves all I want, and typically the tea leaves are correct, okay? But that's not a guarantee. Like, this is not a stock you want to sell your home or mortgage your home and put all in on POET. Okay, this should be a relatively small amount of your portfolio if you are invested in a company like this or other speculative AI companies that, you know, maybe have the potential to 10x, 5, 10, 20, 30x. A small amount can make you a lot of money in something like POET. Okay, now short interest of free float sitting at 9.63%. That's very low for a less than $1 billion market cap company, okay? Especially if you've watched the channel recently, you know that single stock volatility is very high. Wall Street is nervous about big tech earnings, so what they're doing is they're going out and shorting smaller cap companies instead of shorting Apple or some of the Mag 7 names, okay? They're nervous about that Mag 7 guidance. But what do you think happens if Apple or Google or Microsoft or Amazon wets the bed? Yeah, sure, those stocks might fall 5 to 10%, but small cap AI stocks, something like a POET, something like a Resolve, gonna get absolutely crushed. So hedge funds and institutions, they are shorting these smaller stocks in anticipation of what could be bad earnings or bad AI guidance from the hyperscalers. I don't think that's going to happen. I think volatility is going to collapse. You can see in the VIX EQ was up 3.5% today, sitting at about 50% of the total fear you were at in April versus the VIX that is back to lows, right? That just shows you how extreme the fear is. But once that volatility collapses towards the end of this week, really on Friday, as we get a Fed cut on Wednesday, as we get potentially the end to quantitative tightening, you're going to see POET get some real upside momentum. Okay, and that's the thought process. Now, today, you do have 2.2 million shares that are being covered on. So institutions, they're taking the opportunity as the stock is down 9% to cover. Look at this trade. You have a January 14, 2027 $10 call coming in here for $119,000. Now, last week on Friday, you had a November 6th $8 call worth $218,000. Okay, break even of about $10.20. That's looking at some upside from here. You had a November 6th $850 call with a break even of about $9.50 or so. Looking at some upside from here. Okay, in fact, over the past week, you've had 17 different trades from hedge funds and institutions, totaling $2.8 million with a positive order value of 96%. 96%. You know, they're pretty bullish on the stock. Okay, so like I said, I did do some buying. Now, not in this portfolio today. Current market value, $5,183. Average cost, $8.65. Actually down about 14.5%. So this portfolio could be a good one to average down in on this position. I currently have 700 shares. Now, I did do quite a bit of buying in this portfolio, invested for 18 days, average cost basis, $12.18. Unrealized return down about 9%. 2,500 shares now purchased in this portfolio. Current market value, $18,525. So this is 15% of my portfolio. I do some shit that you shouldn't, okay? Like don't copy what I'm doing. Don't try to copy what I'm doing, okay? I read the tea leaves, and the tea leaves don't lie, in my opinion. But that's not a guarantee, okay? Like, The stock could go down substantially from here. But I do like the setup. I do like the risk reward that Poet has right now. And I do think bigger news is coming soon. Okay? There's no justifiable reason why institutional investors would pay 30% more than current market price to buy a large position in the company. Besides, there is good news coming. There is a reason for that. And likely by actually doing this private placement instead of just buying the shares on the open market, they are probably privy to some news that maybe the average person is not. They probably know what partnerships could look like. They probably know what guidance around earnings is going to look like. And that's the deal. And that's really the whole deal. Poet is a story company at this point, largely. Okay? It's going to move on headlines. It's going to move on partnerships. Okay? Things like that. And earnings November 13th is going to be a huge, huge deal for the stock. But again, if things go right, we get a partnership, something goes right, you're looking at the stock that could easily be a $40, $50 stock in 3-6 months. They're targeting data centers. Okay, data centers, that growth is not slowing down for a long time, and Poet's technology helps data centers become more efficient, use less energy. Okay, that's going to be a pretty hot market if their products start to catch on, in which it looks like they're starting to, at least a little bit. So again, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Ladies and gentlemen, check that link out as well in the description of today's episode. Come sign up with Public. Okay, sign up, deposit $1,000, get yourself $100 in your choice of free stock. That is, 12 shares of Poet for free? Hey, why not? It's free money. Have a great rest of your day, and I will see you in the next.